Welcome to the Jupiter Condo and Townhome Real Estate Market Update for January 2025. There is a lot going on in the condo and townhouse market between insurance requirements, inspections, and all sorts of other fun stuff. So I'll try to get around to some of the common questions I'm asked, but let's also look at some real estate data. Median price of condos and townhomes in Jupiter is now $518,500. That is down from $650,000 a year ago. My name is Casey Prindle, your Jupiter Realtor. If you've been thinking about buying a home in Jupiter, selling a home in Jupiter, if you've inherited a home in Jupiter, if you're looking for a second home in Jupiter, any kind of real estate stuff in Jupiter or the surrounding areas, give me a call. My phone number is 786-443-7203. It's right down there in the description. You can email me as well. That email address is also down there. Get in contact with me. I love to talk about real estate. Data typically runs 30 days behind the date of this report, which is why you'll see December data in January. And I'm going to go ahead and give you some of my additional thoughts that I couldn't squeeze in anywhere else here in the video towards the end. So stick around for that. All right, here we go. Jupiter. Condos and townhomes. Median price, $518,500. I said at the top of this, we're down off $650,000. What do I take from this data? Little to nothing. I've said this before. I want to bring it up again. A lot of people focus on median pricing. That's fine if you're looking at a larger MSA, like looking at Palm Beach County on the whole or something like that. But we only have 42 sales here. And to make that even more of a dichotomy, we're lumping in things that are against the ocean versus something that's, in downtown Abacoa. It's just that it doesn't translate through a whole lot. So I don't pay a whole lot of attention to this. There is a further separation going on between condos and townhomes. And this is why you got to be especially careful if you're looking at this data. And whatever product type you're looking at, you got to match against that product type now, because the condo and townhome markets are so divergent right now. There's just a lot going on in condo markets with, milestone inspection reports, and I think people are a little nervous to get into condos. Now, all that being said, look, take some more due diligence to buy a condo or townhome now, but there are certainly solid complexes that you really don't have a lot of these fears, where some other older complexes with large assessments coming and everything, I get the fears. The truth of the matter is, townhome market here in Jupiter, newer construction you can call it for the most part in a lot of these. So you're just not going to have a whole lot of the worries that you have. It's hard to compare something close to the ocean with cast iron piping versus something closer to downtown without flooding risk that has PVC piping, newer roof. The list goes on and on. So anyways, take it with a grain of salt. Let's go ahead and move on. All right, 42 condos and townhome sales. Now again, we have a low number of overall sales. I want to just highlight something. Look, the overall trend on this chart, it's down, right? If you kind of draw some lines from the peak here, the peak here, you're kind of straight down. But look, if you bought something in 2021, this market is going to feel a whole lot different if you're a buyer in December of 2024, right? We went from 155 sales down to 42 sales. A little bit of a peak here at 92. I'm curious to see what beginning of second quarter brings, because that's going to reflect through some of the closings from March, usually a pretty busy month for condos and townhomes around here. But look, this is a market in flux. But again, if you're looking for the statistics that are important, the total number of sales are very important to keep an eye on, because at the end of the day, this just tells you how many buyers are coming forward, raising their hand and saying, yeah, I want that property. I'm willing to buy. I understand the headwinds in the market. Don't care. This is the one I want. So, of course, if you're a seller, you'd like to see this number higher. But I also think if you're a seller, this just means adjusting some expectations on how quickly your property is going to sell and for what percent of list, and whether you should price aspirationally or aggressively. When you see a low number of sales, you have to weigh all that into your decision-making process. All right, average list to sales price. Now, for those of you that are new to this, let me give you the brief overview. This is the amount of something, a percentage that something sold relative to its original list price. So if this originally was listed at $100,000, it sold at $95 and change, right? Pretty easy to understand. Now, the lower we are on this chart, the more room for negotiation buyers have. The higher that we are on the chart, when we were up here, sellers slapped a price on it and got it plus some. Down here in the chart, you can't do that. You can't just throw up a price willy-nilly and hope you're going to get it. Data says you're just not. I think the trend line here kind of favors to the downside. So I think what it's saying is there are a lot of sellers, and let's be honest, a lot of realtors that are giving people aspirational pricing and saying, well, this is where the market is. I just don't believe that. I believe the market is softer than a lot of other people believe. And I think you have to price that into your offers, whether you're a buyer or a seller. If you're a buyer, you need to price in some downside. If you're a seller, you need to accept some downside. That's just kind of where things are going to transact now. Before I move on, if you are thinking of buying a home, selling a home in Jupiter, downsizing, upsizing, second home, maybe you inherited something, maybe you want to move here, maybe you're just sick of living here. I don't know why, because I love it, but maybe you are, and you want to sell, go ahead and give me a call. My phone number is 786-443-7203. You can also text me at that phone number. My email address is going to be below here in the description. Feel free to email me. However you want to get in touch with me, just go ahead and get in touch with me, all right? Median days on market. So this is going to tell you pretty much, how strong the market is running. Quick side note to this, median days are just the amount of days a property was active. If you're looking at total time to close, you're going to want to add 30 to 45 days onto this number. Use this in a few ways. If you're a buyer and you see something's on the market for 30 days and you say, ooh, I think there's blood in the water. It's been on the market for too long. No, it hasn't. No, 39 days is the average. Hadn't been on the market too long. Don't do that. Who is this number good for? Who is it worse for? The lower number of days on market are better for sellers. It means buyers are going to be pressured to make a decision, right? If there's more days on the market, higher days on market, buyers aren't pressured. Same property that they saw a month ago is still on the market. They're not really going to be pressured to make a decision. So that's how you should interpret this. Median price per square foot. So I would kind of say we're flirting with the lower half of the chart here. Again, just like I feel about median sold price, don't pay a whole lot of attention to this. The sample size is just way too small. And again, it's going to lump in oceanfront with downtown, with construction from 2025 and construction in 1985. So it's just kind of all over the place. What I have said, and I'll continue to say, no matter which property type you're looking at, whether it's single family home, condo townhome, the stuff in good condition, updated, newer stuff, that's stuff that's actually selling. If you throw junk on the market, you got to price like it's junk, because there's not a whole lot of buyer interest for renovating and redoing everything. So what I see anyways, people are just sticking with the more repaired stuff, more updated, better condition stuff. So do the little things before you list is the takeaway there for me. Anyways, total dollar volume. All right, total dollar volume. Now, let's kind of take a look back here. We were at 36 million. We're down to 29 million, call it 30 million. Do I put a whole lot of stock in this one? Once again, small sample size. I'm not putting a ton of stock in it. This chart kind of zigzags, and it makes sense that it zigzags, right? You have townhomes in Admiral's Cove. Those are going to a handful of those sales, handful of waterfront sales. There's a new construction townhome project against the water. A few of those sales are going to register. That's going to move this number up really fast, and it's going to make it look deceiving because, again, we don't have a whole lot of sales. So, kind of glance at it. I don't want you to focus too much on it. I just, again and again, I think there are other stats that are more worthwhile to focus on. Of course, the next one is going to be the one that I say pay more and more attention to. All right, I will be honest, a little bit of a surprise here with this curling down. I'm expecting this to rise up more and more. Supply is, if you look at the 12-month change, it is up 23%. That is good for buyers. It means you have 23% more choices than you had this time last year. An increase in supply is going to favor buyers. A decrease in supply is going to favor sellers. Now, I've kind of, I get asked a lot, is the market going to crash? And what I always say is, let's kind of look at what's supply doing and what are the total number of sales doing, and let's kind of put it all together. And a lot of people ask, how can prices be rising if sales are going down, right? It's a good question. And the answer always lies with supply. If we have reduced supply, it's going to push prices up because buyers are just going to have to pay what the sellers are asking if they want to buy. There's just nothing for sale. That's how the prices move up. A flood of inventory changes that equation. A lot of inventory added to the market. You know that shortly thereafter, prices are going to pull down because, again, buyers are now going to look at 7 properties, like 4 of them, and throw offers in on 4 of them at a low price and see who wants to play ball. If you're working with me anyways, that's what we're going to do. I do think that this number is going to rise. I think this is different than single family homes. I think that condos and townhomes have a lot of second homeowners or a lot of people who upsized and intended on maybe holding that condo or townhome. And I've run through this with a number of people. Look, if you're an investor right now, your top line is capped. Rents aren't moving up anymore. Your expense line is rising. Your HOA fees, your insurance, your taxes, it's all going up. And your margin in the middle is shrinking. And so it looks less and less appealing to hold that marginal property for investment. And if you look at supply here and you think, well, now may be a good time for me to exit. And honestly, you might be right. Look, we had a single family home in Fort Lauderdale. We exited for a lot of these same reasons, to be honest. So I digress. Let's go ahead and get on with some of my final thoughts here. So before I wrap this up, call, text, or email me, 786-443-7203. I like it when people call me. I like to talk about real estate. It's what I do all day, so don't be shy. Even if you're not doing anything right now, honestly, and you just want to kind of talk about the market, that's my thing. So don't be shy. Go ahead and reach out. So the way that things are phrased to me often is, do I think that the condo and townhome market in Jupiter is going to crash? Or whatever market somebody's looking at. I think crash is a strong word. This is not 2006. We don't have a lot of distress in the market. I track a lot of the default numbers because I had a large background with defaulted real estate. From an investment standpoint, sure, you'd like to see a lot of that coming on. It's not happening. With 3 and 4% rates and people have equity, all they have to do is throw their property on the market. Maybe they go 10% below market. They're able to find a buyer in a relatively short period of time. I just don't see that distress coming back. We don't have a lot of adjustable rate mortgages. A lot of people did 30-year fixed mortgages down at 3 and 4%. Look, again, are there people that are going to want to sell? Sure. And again, if I have a second home or, I'm kind of marginal on whether I wanted this investment, whether that tenant's becoming a headache and now I'm thinking about exiting and I'm seeing these rising costs, yeah, that supply, I could see it coming to market. There is also a lot of people who said, hey, if I get my price, fine, I'll sell it. They threw it on the market. Listing expired, they didn't get their price. They're not distressed. They're not putting it back on the market. They didn't need to sell in the first place. It was just kind of a, hey, if the market's strong, and a lot of agents, I'm watching you. You tell people market's great right now. It's debatable at best. Debatable at best. If you're pricing something over the market and it expires, look, man, that was a bad idea. Aspirational pricing's not happening. Very few properties can you pull that off with. But again, if you want to price 10% below market, you're probably going to find a buyer in relatively short order. So if you need to get rid of it, you can. That's different than 2006, where there was no bottom. 2006, 7, 8, whatever year you want to tack on it. That was true distress. I was transacting at that time. I can tell you all about it. That was a mess. This is not. So, anyways, those are my thoughts. I'd love to talk with you more about it. If you disagree with something I'm saying, go ahead, call me. Let's debate it. I'm not shy. 786-443-7203. Give me a call. I will see you guys next month. If you live in cold weather, move down here. It's a bad idea. See you guys.